The FVG channel indicator, which is offered for various platforms on the TradingFinder website. Traders can download the indicator file for MetaTrader 4 and MetaTrader 5 platforms from this section. And also to learn about how it works and operates. They can refer to this page for information about the indicator. From the navigation section, we select the indicator file, and by dragging the file onto the chart, we run the indicator. We do this. Once the indicator is run on the chart, a price channel will be displayed on the chart. The FVG channel indicator is a special and practical tool based on ICT concepts, and the FVG gaps, or fair value gaps, perform their own calculations and draw a price channel. This channel consists of 5 different lines, which traders use based on the displayed lines. They can do this. They can identify price reactions in the market. The midline acts as the average of the previous FVGs on the chart, and based on specific mathematical calculations it performs, it draws the price channel for us. As a result of these calculations, a line is drawn as the extreme high and the overbought band line. In the market, this is considered an overbought area, and when the price moves above the upper band, a sell signal is generated. And after that, we see that the price enters a downward trend, and when the price moves below the lower band, a buy signal is generated for us, and after that we see the price enters an upward trend in the market, which we can use as an opportunity to enter a trade. Also, the drawn bands and lines are considered as price reaction levels. And if the price touches these bands, we can observe price reactions. After that, the price begins to move, and here we see that it has touched the band between the extreme low and the midline and moved upward. Again to the band between the midline, and it has touched the extremes and moved downward, and this process continues in the same way. Also, traders can use the main trend direction of the channel to identify the main market direction. So in this situation, the market is in a downtrend, or in this case, the price is in a bullish trend, when the channel is in a bullish market and the trend is upward. If the price moves above the midline, it indicates strong momentum, and the main market trend is bullish, and when we are in a downtrend, if the price moves below the midline, it indicates a strong bearish trend, and we can use these situations as opportunities to enter trades. For example, here the price has moved below the midline, and if there is a pullback, we can, of course, enter a sell position targeting the lower band. The price has moved downward. In case of a pullback, we can enter a sell position, or as we can see in this section as well, the price has moved above the midline and is in an upward channel, so with a pullback, we can enter a buy position targeting the upper band. Traders can use this indicator easily. Based on different strategy systems, they can identify trading opportunities and enter buy or sell positions in the market. In the settings section, under inputs, there are only 2 parameters available to us. In the first input, we can set the number of previous candles to identify the gaps of the fair value of the mitigate here, and in the second parameter, we can set the smoothing period of the channel, which is used to bring the lines closer to or farther from the price. In the first parameter, we can also set the value of the FVGs and the number of calculations for the FVGs or the forward voltage gains of the mitigate to be averaged here in this particular step. Well, friends, we've reached the end of this indicator tutorial. We'd be happy if you share your comments and suggestions with us in the comments section.